Be an expert with our how-to videos for real estate. Here's some tips on the loan process.
Hi, Joe Massey here, Senior Loan Officer with Castle & Cooke Mortgage. And today we're going to be talking about investment properties and buying properties for long-term profit. So there's a lot of different ways to purchase investment properties. Generally what I recommend and what I help most of my clients with is we help them purchase a property using a conventional loan, and they can put down anywhere from 20 to 25% or more, and then hold that property for long-term profit, rent it out, and generate cash flow on the property. So we're seeing a lot of people right now purchase properties anywhere from $100,000 to $200,000. To get the most beneficial financing terms, you want to make sure that you've got that 740 credit score or above. You do want to have, of course, good income. That can be self-employed income or W-2 wages, whatever type of income you have. We just want to make sure you can afford the payments. And 25% down is going to get you the most beneficial terms. So by having that 25%, it's going to allow you to get the lowest monthly payment available, rent out the property, and then of course have the best possible cash flows. Now the downside, of course, is having 25% can be expensive to get started. Also, you'll need to invest your own money into the rehab of the property. So if the property needs $10,000 or $20,000 or $30,000 worth of work, just keep in mind you're going to have to invest that money over and above your down payment. But if you've got some cash that you've been saving up, this is a great way to invest it into a long-term profit potential. Between the monthly cash flows and the appreciation of the property, you stand to really make some good returns right now in the market. Other risks to keep in mind are going to be, of course, rehab on the property. A lot of times people think it's only going to cost $5,000, they get it and it costs $20,000. So make sure you've got plenty of money available. Also make sure that you do get pre-qualified with me before you get started. I've had a lot of guys come to me, okay Joe, I'm ready to close on my loan in 2 weeks and we want to get started, and I take a look and they unfortunately don't have good credit or they don't have good income. So just like purchasing a primary residence, you want to make sure that you get pre-qualified and really have all your ducks in a row on the financing piece. So I think that investment properties can be a real great benefit for the right people. Keep in mind you will be a landlord, so there might be some challenges there. You want to make sure it's something that you want to do, or you at least have a good property manager in place. Make sure that you're comfortable investing the appropriate amount of money to get a good return on your money, and make sure that you're comfortable with the funds being tied up for a while. It can be tough to access those funds again in the future. You know, you might have to sell the property in order to get access to those funds. So just make sure you're comfortable with the investment. Overall though, investing can be a great benefit for folks looking to diversify their portfolio. So thanks again for joining us, and we'll talk to you again soon.